Hi guys, how are you? So today's video is going to be talking about my all my trade reviews here. So I'm going to be going through all my results since I started trading, which was pretty much late February, early March. So it's been approximately 2 months, I'd say. And so I've had 120 trades in total. So I'm gonna show you my results on the whole trade basis, but also on a sample set of approximately 20-30 trades at a time. And I think it's so important to measure your trades in this way because you can get a better idea of what trades are working better for you, and what trades you can start to cut out of your style completely. Okay, so basically, just to give you some rough numbers here, I had 120 trades total. And out of those 120, 63 of them were winners, and 57 of them were either losers or break-evens or trades that just, they might have been winners theoretically, but they ended up being losers because of stupid things like volatility drops and premium decay or whatever, you know? So kind of trying not to skew my results in that regard. So basically, if it was a break-even or a trade that, even if it was a winner technically, like where I entered and where I exited was theoretically, if I would have done it with stock, it would have been a profit. I still included that into the loser category because I'm trying to improve that win rate and like almost go in with a handicap. Okay, so here we go. Since February, we had the first few trades here. I had 20 of them. I had 11 wins and 9 losses. That was the first bit, okay? Then we kept going and we had 20 wins and 15 losses. We kept going, and now again, a lot of this stuff is including trading mistakes. A lot of trading mistakes here. Okay, then we got to the point where we had 57 trades in total. I had 40 winners and 25 losers, so I had a decent streak there. A lot of long option trades on Apple and some of the high liquidity option names. Okay, so then 94 trades. We had 51 winners and 43 losers. So that's after I hit a bit of a streak, a losing streak there, and basically I managed to pretty much blow up the account at that point, even if I had more winners than losers. So that just shows you that poor risk management, basically. Poor risk management and poor self-management. That's what I had down. So I funded the account a little bit more and we kept on trading. So from those 94 trades, I kept trading for the next 2 weeks. That puts us to where we are today. And I have 120 trades total, 63 winners, 57 losers. And if I could make any analysis out of that, I definitely need to remove trading in the afternoon any time at all. So the biggest losses I took were either from, number one, trading in the afternoon or when I was tired, and number two, from long option trades that I stayed in too long and didn't cut them early enough, okay? And obviously both of those things are things that can spark you to fail at managing your risk or just make common trading mistakes. All right, another thing I can add in is if you take a trade where it's like a momentum type of trade, you want to get in quick with that flow of the market. If you get a bad fill, for example, and the trade goes back to your break even, you still need to follow the rule of getting out when it gets back to your break even. You can't just say, oh, I got a bad fill, I'm going to scale in a little bit more. You're setting yourself up for problems with that, okay? And the more leeway you allow in your trading system, the more you allow yourself to make mistakes, especially if you have a system that allows you to kind of adapt a couple of things here and there. If you have a creative mind, okay, I think trading requires you to be somewhat creative in how you adapt your strategies on a daily basis. I also think that being too creative can be negative to your strategy because you're always going to want to be looking for ways to perfect it and adapt it, or to kind of give yourself leeway and say, oh no, you know what, if I'll leave 50 cents leeway here. But you can do that. You just need a lot of experience in what you're trading. And that's called being a discretionary trader. There's nothing wrong with that. But definitely you want to have a systematic approach to your trading. So there's a few setups that I like to trade, and I basically always trade the same instrument, which is the SPY these days, SPY or Apple or any of the big tech sector names that have good option liquidity. So I'm sticking to that completely. I'm not trading anything like small caps or whatever. Our main focus here is being consistent with these option trades, either long option scalps or credit spread, collecting credit from the market. So basically the idea behind that strategy is you're collecting a credit from the market. You are making an assumption of where the price will not go, which is actually a lot easier than making an assumption as to where it will go. In fact, that's kind of what I'm focused on. So that's the kind of the layout I use on Trader Workstation. I have that on my small monitor next to me here. And yeah, so I got 2 tapes, SPY, Qs, 1 little chart, and I basically enter all my orders from here with hotkeys. Got another tape here for the option, and got a little depth there, and that's pretty much it. You know, I don't use Trader Workstation for much. I was doing a little research on trading platforms and which platforms are best and everything, but you know what? Stick with interactive brokers. It's not a big deal, man. This is a good execution platform. Keep it the way it is. And that's it. So guys, those are my trading results. I'll show you. I'm actually down on the year. I'm down $1,500 to start. And so yeah, that's it. There's no getting around that. Let's keep it going, all right? So I've definitely noticed profitability, more consistent profitability in the credit spread trades versus the long option trades. So yeah, guys, I'll leave it there for today. I wish you all the best. Take care. Bye.